Okay, hi everybody. This is Bitcoin Live. It is our weekly show where the Power Law team and the Minotaur team join forces. We analyze the market with different tools that are more robust than the usual technical analysis tool. We look at global liquidity, local liquidity. We also discuss our trading system to see how it performed, which kind of moves did it do. Um, so let's actually dive in, and I will start with one of my indicators. By the way, if you are interested in these indicators, you can read below how to join our Discord. So I have a Discord group with more than 1,000 people, and we share these indicators. We have about 15 of them. So this indicator, I think it's a very interesting indicator because recently there's been some kind of debate. There are some analysts that are trying to dismiss that there is a strong correlation between global liquidity. So for global liquidity, I'm using mostly M2. Basically, is a measure of how much money is in circulation. You can look it up. What is the exact definition? In this case, global here means I'm not just looking at the United States. I'm using the M2 of many different countries. Really, if you look at the contributions, that's something that I did. US, Europe, China, right? The usual suspect. They made almost 90%. You can add a few other countries, but it doesn't really matter. It's mostly the US, Europe, and China that basically are printing money and creating a lot of liquidity. Eventually, this liquidity finds Bitcoin because that is the entire idea, right? From a Bitcoiner point of view, we have this vision that basically the entire wealth of the world is being transferred to Bitcoin. And so you will expect a very strong relationship. Now, the question is, there are two main questions. One is, the overall, if you look at the overall picture, this is something that needs to be explained, right? So Bitcoin is a power law. So in a graph like this, where we are taking the log of a price versus linear time, mainly because TradingView doesn't allow us to do the log of time, unfortunately. By all the calculations that they do, when you do the calculation, you calculate the curves, the power law curve. They are actually, you can include them. You can include the log of time. But it will look like a curve, right? This is why Bitcoin looks like a curve in this graph instead of looking like a straight line. But you see, look at this model of a global liquidity here. By the way, it's not even the global liquidity itself. I'm making actually a model of a price according to the relationship between global liquidity and the Bitcoin price. But you can see overall over this existence of Bitcoin, over the time of existence of Bitcoin, it looks like a straight line, right? A pretty good straight line. I drew this straight line as a reference to show you that it's pretty straight. That means that the liquidity itself is exponential. If you have a straight line in a graph like this, it means that it's exponential. So over the long period of time, the relationship is much more complicated. If you look at a short amount of time, maybe like the last 10 years, then the two can be compared more easily. And in fact, there is a power law relationship between the liquidity and the price. It's an approximation because, like I say, over the long period of time, it doesn't work that way. But it's a good model because it allows us to write an equation that tell us how big of a change you expect from, when you look at global liquidity relatively to the price. And the price is basically a power law of 9. That means even a small change in global liquidity get us a big change in price. Now, the other question is every twist and turn of the of the global liquidity associated with every twist and turn in the price. And that no, is not the case. One of the reasons is it's a lot of these fluctuations that you see are not due to the global liquidity itself, but the exchange rate between one currency and the other. Because in the end, to sum them together, you have to use basically the same unit, right? So you translate. So it's basically, well, global liquidity for China will be how much yen there is around, right? But then you have to translate that yen into dollars. So you can sum and get a total value of a total cash. And that value changes, right, day by day because of a exchange rate between the two currency fluctuates. So a lot of these fluctuations here are due to that. But in general, and there is one further issue that is many people have proposed that you need to shift. It seems that actually the global liquidity leads the price. And from a logical, I was suspicious of this for a long time because I thought, well, people are trying to do pattern matching, like, for example, okay, here I see the liquidity is going up, the price is also going up here. Let's shift it until these two things match. You can try to move things around until you find a suitable match, right? And then you can see there is also the problem of scaling because look how well they match here, but they don't match from a scaling point of view here, right? But you can, because there are two processes, you can stretch and squeeze one until you find the right matching, right? And all these are questionable approaches, but there are many things you can do to actually show that this correlation is real and actually a very strong one. So it doesn't apply to every twist and turn. I will not say, oh, look at here, it's going down, so this match with this very little detail. But the general patterns, like long stretches of time when the liquidity goes up and the price goes up, actually they do. And one of the way to do that is, and to resolve this problem of scaling, is to look at the direction. So in this graph here that you see below, I calculated this quantity that is basically, first of all, I smooth both the price and the liquidity. The difference between purple line and the green line is that one is not smoothed, the other one is more smoothed. So I'm smoothing the purple line using the green line. So I don't look basically at these small little twists and turns, but the general change, the long-term change. And then I use different delays. I try many of them because we don't know which one is relevant, right? Some people use 85, some people use 70 or whatever. So I tried many, many, many of them. And then I calculate what is called the winning rate. So basically, I'm looking up at many times we went up. So instead of looking at the size of a change, I'm looking at two numbers. I assign one when we go up and assign -1 when we go down. And then I calculate how many of these ones you have in a window. It could be 100 days or whatever. You can change it actually. And you get, it's nice because then you get an oscillator, right? Because sometimes we go above 50. So maybe I should add a line here that it's our reference line, 50. In fact, we can even do that now. Let's add a line. Maybe here. Trend line. So let's add the line 50, right? Because 50 will be our reference. If we are above 50, it means that we have more winning days, right? We went up more than down. And you can see that the times where the winning rate starts to go up is associated with these peaks, right? And by the way, GL is the orange one. You can see it's GL. It's GL because there is more data here in the future. This is the future because it's predictive, right? It turns out that is leading the price by about. It turns out, in fact, I tried this with many different values. The one that gives the strongest correlation, it's about 85 days. And using 85 days, we have a little bit of, basically we can predict what the price will do by a huge big lead that is really interesting. And now you cannot say, anybody that claims that these two things are not correlated doesn't know what he's talking about, because you can see that it's strongly correlated. Not perfectly, because for example, here is the minimum for the um, price. Here is the minimum for the GL, but in general, they go in the same direction, right? They have cycles that are very comparable with each other. And remember, GL is leading, so when GL gets a minimum here, it's actually a prediction that we are going to have a minimum soon for the price. So it's pretty strong. It's very interesting way of demonstrating that the two actually work together. And so, for example, right now, if we are looking what is going on right now, this is where we are right now. This is a kind of a prediction of what is going to happen next. Will I take it as a guarantee that we are going up? No, but it's a very good sign, right? If we started to see the global liquidity going down, it will not be a good sign for the continuation of a bull run. If it's going up, like it's going, and it's going up in a very robust fashion. It has this segment from here to here, but it's basically a prediction for the next 3 months, 85 days, right? The winning rate was above 50%. This line is 50%. It's actually increasing over time. So it's a very good sign. Is it a guarantee that the price will follow? No. But, I will say it's a necessary condition almost for the continuation of a bull, even if it is not sufficient, right? Even if it's not a guarantee. But it's for sure a very good sign. And we are still on the power law. I can add, maybe we can add to these so we don't have to switch chart. Let me see if I can add a simple power law. Okay, this is a simple model of a power law. You can see that we are coasting along the power law right now. So the red line is the power law. Maybe I can make this delete these so it's easier to see. So this is the simplest model that we have for the power law, right? The red line is the general trend. The white line is what we call the support power law. That is actually what we use for our trading system. Is the place where we basically never can see in the entire history of Bitcoin, we never cross that line. Maybe we one time during COVID, this was COVID, we barely weaked, right, below that. And in fact, if one wants to be super safe and want to use this as a kind of your bottom, one could put like 10% below that, and then we never really cross it. And you can see here, even here when we had the minimum, etc. And then we have a general trend. Right now, in fact, this you can say that since all the way to March of the last year, that is kind of year, we basically kind of oscillated around the power law. This is all what we did. It's a little bit disappointing because we should be in this region since November of last year. We should be in this region where we are above a power law and when we have a bubble. But we are for sure not in a bear market, but it doesn't look like it's a very active bull market. It doesn't mean that we are not going to have like maybe in the next few months a fast growth that will bring us to the projected 200K. That should be the maximum for the peak, that we calculated many times. You can see our previous episodes, so we're right to that conclusion. It's just that it's starting to be more and more difficult as time passes by. But we are not yet to the place, in particular, given this very good sign that the liquidity is continuing, etc. So we should continue to go up. Now, even if we moved along the power law, that will mean by the end of the year we should be 130. So I'm not, I'm not completely, I'm not attached to this idea that we need to have a bull run. As long as we are following the power law, we are fine. Basically, we are going to reach $1 million. It will take 8 years, but we are going to do that. Anyway, so I'm going to stop here for the moment, and I'm going to leave the floor to Marcos because he will go a little bit more in detail about the local liquidity instead of the global liquidity.
All right, let me share my computer here. Okay, I see some questions already rolling in there.
Yeah,
One of them I will
you
answer
yeah
here.
you can feel free to answer any question.
Yeah, one of them is talking about, does the range allow the time for the positions to close out the shorts? So someone's concerned about that. So we'll talk about that. All right. So what we're looking at here is a chart, a typical trading view chart that we're analyzing the perpetuals, the future perpetuals. We love to watch derivatives because leverage is where the price is discovery happens first. That's where the bubbles get blown out of proportion, and then that resets and rebalances everything. So we like to watch the derivatives. We're the particular derivative exchange that we're looking at is Bybit. They're all very similar, and we're using our data from there. We'd like to thank the guys at TradingView, trading differently, for their algorithm that they're using. So basically, real quick, here's we're looking at the daily time frame. We have a simple volume profile, and we're in this little channel right here, this little um, downtrending channel that could be seen as a bullish flag. I don't particularly I don't particularly use patterns, but they do develop. But we are in this range, and we're making these lower highs and lower lows. Um, we're coming off of a key level right now of resistance, and the bottom of that channel puts us dead in the range of the point of control, which is this high volume node here. So in my opinion, that's going to be a key support level that we can bounce off of and probably start heading in a bullish direction. So let's see what the liquidity has to say when we put that in there. So right now, when we overlay the liquidity in here, we can see what's going on behind the range. We still have a tremendous amount of shorts that are densely packed here at the top, and we also have some fresh longs. So someone asked, how does this work with these shorts? Are they trapped? Are they getting off? Well, they're actually trapped. Um, we actually have a volume profile in here. I'm not going to pull that, but what happens is the market creates these ranges and it builds up the liquidity on both sides. So we have that long and short liquidity, and what happens is some people some people call this fair value. I call it locked in range. What's really happening here is the market is ranging, and their bets being placed between the bullish bias and the bearish bias. So as they begin to make their bets, their liquidation levels and their high leverage positions and stop losses and limit orders get put in these areas here. So it's not really fair value. It's just where the market makers algorithms are locking in all the traders. So the specific answer to that question is these guys, if the price is right here in the middle, that's where it spends most of the time. These guys are either at break even or in slight drawdown. So they're not going anywhere. And then conversely, the bulls, the ones that are making bullish bets, they are also slightly in drawdown or close to break even. So they're not going anywhere either. So the market kind of locks everybody in like that. And that's why it does these zones to build up the liquidity. And that's why if you're a smart trader, you do not want to try to manually determine what's going on in here. Like the price is right here now. This is not a good spot to be trying to make a bet on bullish or bearish, because you're just going to get washed into these two zones, and the market will take both of them out. It's going to take both of them. So you don't want to trade like that. Um, so anyway, the outlook is we more than likely there's a high probability that we'll uh, retreat from this, we'll consolidate from this resistance point here, and we can use the liquidity to actually reference that. Let me drill down here a little bit more. You can see that they bumped up against the short side, but they're not actually taking the short side. They're still working this long side. So it kind of can be confusing. And the market, people get all excited by saying, hey, the market's going up. Not really. It's still just taking the shorts. It's not finished yet. So when we add back in the 10, you can kind of see that this is the primary target right here. It's in confluence with this trend line. It's in confluence with the point of control and the density of long. So you have to ask yourself, how does the market wreck the most people, or how does the market makers take the most liquidity? They wash out these longs, and then they're in a perfect position to come back for these shorts. So, if you think about it, they've already extended, so they don't have the momentum that they need to take these shorts, and they don't need to take them right now. These shorts aren't going anywhere; they're locked. So the smart play, from a computeristic standpoint, a number standpoint, will be to pick up this inventory right here. These people are going to be forced to sell low, not high, and then carry that inventory up here with all these welcome force. These people are going to be forced to buy high. So sell these. They're going to sell low and buy high. So that's the play that you can see that's basically being telegraphed if you know how to look for it. So that's the way it's shaping up, and it's very simple, and it makes clear sense. These are going to be forced to sell low. These are going to be forced to buy high. So what would you do? You would grab this inventory right here, force price down, and then carry that inventory up here. It wouldn't make a lot of sense mathematically to go from here to here. You're not going to make enough money. You're not going to make much money on the price scale. So pick up this inventory down here. There's a ton of it, and take it up there. So now you can capture this 10% move. It just makes sense. All right.
Good.
What do you guys think?
Yeah. Is there a way of plotting the power law on top of this or no?
Mm, yeah, I wish we could. The problem is we're inside of their interface,
Okay, very interface.
and
Yeah.
yeah, we can't bring it in.
Yeah.
But it would be cool to do that.
Maybe
Hmm.
that's something we can ask the team, Marcus, and see if that's something they'd
Yeah.
be willing to implement. That would be cool.
Yeah, because we could actually add it to their. There's an indicator list right here, all their indicators, so we could add the power law to that indicator list and get it
Yeah.
put in here. Yeah,
Yeah.
so
You
it can
can
be
ask
done.
it.
Can be done. Yeah.
So it looks like these oscillations are very regular. What are these oscillations so far? With the two that are trapped in these boundaries. What are we talking about? Like a month, about a month, right?
Yeah, like you can pull a little short term volume profile here, and that's what the market. That's the way the algorithms work. They create these liquidity zones, and right in here they call this is called fair value, or the high volume point of control. But what's typical, that's what they call fair value. But when you really think about it, is from a market making standpoint, this is the absolute point where you can build the most liquidity. Let me back out to 3 so you can see it.
Mm-hmm.
This is the point where if you can keep the price here, you're going to build a maximum amount of liquidity. That's what the actual business model is. It's not about fair value. It's not like you go to a flea market or a farmer's market and you sell me some tomatoes and we exchange. That's not what's happening. What's happening is price action builds liquidity, and liquidity attracts the price. So from a market making standpoint, or from an institutional standpoint, it's about size of liquidity. So this is the
Mm-hmm.
absolute spot where you can generate the most liquidity, because if you think about it, if the price doesn't stay in this range, then one side is going to win and one side will exit. If you keep the price here the majority of the time, they both get locked in. They can't really go anywhere, and that's the objective, is to keep them locked until there's time to harvest them, until you wash out each side, like
Yeah.
it does here and here. So that's what you're doing, keeping them locked, keeping them trapped in there, and continuing to attract. When the market's making these little channeling moves here, that's just attracting more and more liquidity at the wrong, because
Eh,
people. people chase it at the wrong time.
Can we go to 108.5 because this is where my algo is going to close its position. Let's close that position first, and then we go and get that 96.
So you say
Can you make it?
108,
Can you make it happen, Marcus, please?
108 right here.
108.5. This is when my algo is supposed to close this position. So I'm asking you to do something on the market to make it happen.
Yeah, this is
it's a little bit out of range right now.
yeah, this is where you are right here, right there.
Yeah.
You're close. I mean, you just might have to wait a little while. You know, you'll get it.
Yeah, because I want to get that 96.
Well, how many safety orders do you? How many orders do you averaging orders you have?
I still have few. Yeah, if we go there, I think I
Oh,
can
if that's
get
the case, you'll come down with this.
Yeah.
As this comes down.
Yeah.
Yeah.
This is why the bot is so good. You don't have to think about this stuff. You just let it do it.
No. The key is the best way to trade is not look at the market action. Don't look at that. That's designed. This action is designed to lure you in so you can be in this group or this group. Both of these groups are going to lose if you're in the wrong spot.
Yeah. I mean, it's nice to know, knowledge is always good, but that is why we set up the bots to do these things automatically for us. So we don't have to overthink it. Yeah.
Yeah,
so
it's important because I can see, a couple comments as well, and I think I want to make an important point, but it's just, I think people, they look at this price action and they also listen to the news a lot, and what happens over time is you build directional bias. So I can see Cole Carden talking about how, the SPY, the NAS have broken all-time highs. So, and because there's now a peace deal, that this means Bitcoin's going to keep going up. But I think having that, now we know because of the power law, Bitcoin's going to keep going up. But if you try to predict what it's going to do on a day-to-day basis, based on what the news is telling you and based on what you see on a chart, you're going to lose.
You're going to be in here. You're going to be in there.
You can't do maths like that. You can't say because these traditional markets are going up and now we've broken a peace deal, this means Bitcoin's going to go up. It's not true, right? And this is how they get you. It's when you have these directional biases and you marry yourself to an idea that Bitcoin's going to here today because everything says it should. You can't do that. And I'll do a presentation when you guys are finished on how the algo has been trading, and I'll show you why having something that takes those thoughts out of your head is so important.
All right, you're up. Hit it.
All right, cool. So I'll quickly share my screen.
Yeah, I always tell people don't watch the market and don't listen to the news. You can turn that off.
No. So can you both see my screen, Mark's Giovanni?
Yeah.
Cool. So
I will turn off the comments so we can see it a little bit better. We can always answer questions later.
No problem. So this is essentially what the algorithm's been doing over the past couple of months, and I'll run you through the data. I'm also going to use a free trading view indicator that just shows open interest, so you guys can get a good idea. It's similar to the liquidity heat map that Marcus shows, but it's not able to extract data of all the leveraged futures positions, but it is able to just simply show you OI. So it can give you a good idea of where pockets of liquidity are sitting. And this is really interesting because the past few weeks or the past couple of months, I've heard a lot of people saying that Bitcoin's been difficult to trade because it's been going up, then going down, been going up, then going down. And actually for our algorithm, this is the perfect price action. Obviously, when the market trends down is actually when our algorithm will make the bulk of its gains. But when we're in ranging markets, this is very, very good for us because the algorithm is not attaching itself to any bias, right? And this is the most important thing. It's the emotion and the thought process that goes into trading that really kills most people in this market because they have an assumption that Bitcoin is going to do this because of this. And the point I'm making is you don't even need to think, right? When you set it up to protect your capital and trade based on the power law values, you put yourself in a position where it's extremely difficult to lose. It's not that you can't lose, but what you're doing is you're stacking the deck or stacking the odds in your favor heavily. And when you're trading Bitcoin, you need that because It's very volatile and it's very easy to get chopped up in the market. So let me give you an example. At this point, we were trading up. The algorithm closes all its positions. And at this point here, at around 109K, a lot of people would start getting ready to go long because Bitcoin's getting close to its all-time high. It's going to start trading up. All these things happen. And then what happens? There's news that America is bombing Iran. And, we're not going to get into the politics and talking about war on this show, but, this is a classic thing that's been going on since I can remember. War in the Middle East is not new. For anyone that's watching this, this is not something that's all of a sudden a big hot topic. I mean, it's been happening forever. So this is a way that people get controlled by the emotion. And what happens? The market starts falling. Everyone starts freaking out. It's over. Bitcoin's over. We're going into World War III. And I mean, we've heard this time and time again, right? For years and years and years that this is going to happen. And it's simply, I'm not saying it's a direct way that the market makers influence the market, but they know that humans, including myself, all of us, react to this news in an emotional way. That allows them to make money because people are trying to get an idea of what the market's doing. And the second that everyone starts going short, saying Bitcoin's dead, this is over, Bitcoin's going to pump. And there's a reason for this, right? So as you can see, when price falls, we're not fearful of price falling. We're excited for it because it gives our algorithm the ability to cost average into positions. And as you can see, we're taking a number of nice trades here as the market falls, lowering our average price, and then, as the market always does, exiting on a rally here. But what's important is if you can see here, this kind of bluish looking bar, this is showing you a strong level of open interest. So what the algorithm actually does by design is it trades into these levels. The way we've designed it and the way the logic works is that it's always looking to capture buys at levels of interest and levels of where money is flowing into the market, which is very, very important. And if
Yeah,
you watch this trade here, you go, Marcus.
it trades in concert with the market maker algorithms. It
Exactly.
trades just like them.
Exactly. And this is an important point, right? Because this is exactly where the news broke and the market took a huge dump. And now this is interesting because as everyone can see here, we closed our last trade literally just as the news was breaking, right? That there was going to be a war breaking out in Iran, America, and all these sorts of things. Now, what most people would do here is they'd either start trying to short Bitcoin or set up positions. We, at this point, I'm not sitting at home watching the news going, oh my God, I need to turn my algorithm off. I'm not worried about what's happening because I know if there's going to be a lot of selling pressure, that's actually going to be an opportunity for us to make money. And it's very important to watch this trade because we wait a little bit and then we start making buys. And this is important. We're not selling Bitcoin, we're not shorting Bitcoin in this trade setup when the market's falling. We're buying, right? Because what we're doing is buying the fear that the rest of the market is afraid of. And we're buying into these positions. And look what happens. The market continues to fall. Look at where we place our last two buy orders. This is a hot concentration of open interest at around 97K. Everyone can see we literally dollar cost average almost to the T here, right? We're talking within a 0.45% range. And what happens? We take our last order here and look at what the market does. So, this is what's interesting though, is because when this happened, this is exactly when the peace deal was brokered, right? So it's interesting how, these things play out. But the point I'm making is, it wasn't just the peace deal that forced this action to go up. There was liquidity here and there was open interest here that was tapped into, which actually allowed the market to move forward, right? So don't always assume that geopolitical events are directly swinging the price. They do, right? They do to some degree, but it's just simply small weather events in the larger picture, which is Bitcoin following a power law and going up continuously over time. That's all you need to think about. Stop thinking about what Bitcoin's going to do on the day to day because it actually doesn't matter as long as you run things correctly. And then here's the last point I want to make. We take these positions and look at where the algorithm trades up to, straight back up into the same range, closing our positions at the top of the open interest, the top of the liquidity, and now we're trading again. So, over the course of a few days, there was an announcement of a war, the price dumped. There was an announcement of peace talks, the price pumped. And in this period, I couldn't tell you the amount of liquidations. In fact, next time I come on the show, what I'll do is I'll actually bring up an indicator that shows you guys how much money was liquidated during this process, because it's crazy to see.
Yep.
And I can tell you now, there was hundreds of millions liquidated going long, and then there was hundreds of millions liquidated going short. So, this is not new on Bitcoin. People get trapped into this stuff all the time. Oh my God, the market's dead, the market's over. And the second they think the market's over, it pumps. And there's a reason for this, right? It's not happening at random, and it's definitely not happening just because of the war. It's happening because we're playing in key levels of open interest where liquidity is in the market, right? And that's the point I want to make. And Marcus can attest to this as well. So, I think it's important. I'm not saying the geopolitical events have no impact, but what I'm saying is the moves that are being made are already there by design, right? It's already happening.
Yeah, the geopolitical news actually fuels these moves. It makes it even more. It adds fuel to this process. This is a market maker model, and it's just creating and harvesting liquidity. That's all it is. It's creating liquidity and harvesting liquidity. What you're showing on this chart here is one inventory being moved into the other, right? So on the way down, the longs are being liquidated and their inventory is being collected with buy orders. And then on the way up, that same inventory is sold right smack dab into the short orders that are above, and they're forced to buy it back at the higher price. That's all that happens over and over again.
Sebastian, can you, for the people that maybe don't know because didn't hear our previous show, can you give a little summary of how they both works? In particular, the fact that we don't use, we don't buy or sell spot, we don't buy or sell your Bitcoin, because that is a concern for many people. We are using your Bitcoin as a collateral, right? So we are trading futures. And also, if you can answer, some people often DM me and then ask this question, like, for example, do the US people now can trade with this system? Because I think Coinbase now allows for futures, right? So can you maybe address some of these questions?
Yeah, sure. So I'll first address the questions around what we can do within the limitations, and then I'll explain a little bit more about how the algorithm actually does what it's doing here. So basically, you have a couple options when you're trading the algorithm, right? What you can do is you can use your Bitcoin as collateral, which really, depending on what you want, is one of the most powerful things you can do. And what this means is that you put your Bitcoin to work for you, right? So exchanges like Binance, Bybit, OKX, a couple others, BitGet, all these exchanges give you the ability to collateralize your Bitcoin and trade against it. Now, to do this, though, it's very important. The power law framework is the key to everything, right? So you need to have your levels set in a way where the power law support is always in mind. When you work with our team, we show you exactly how to do this. And the key to this, and what you can gain from this, is the full price exposure of Bitcoin increasing over time, which, Giovanni, I believe it's at the moment averaging around 42% a year. Is that correct?
Correct. Yes, correct.
Yeah. So, that obviously is going to go down over time, but I mean, it's still an amazing return. But the beauty in that is that you gain the full exposure to Bitcoin's price appreciation, and the algorithm has the ability to produce you value on top of that, either in USDT or in BTC. So if you can understand, the key to doing that is a lot of people have Bitcoin that they're holding that they're not doing anything with it. And that's fine. I mean, I'm a hodler, Marcus is a hodler, Giovanni is a hodler. We all hold. But the key here is to put your Bitcoin to work. So for US-based citizens at the moment, there is ways to do this. There is ways to do this in a completely legal way. It's not a gray area. It's not illegal. But the best thing I can suggest is, if you do want to collateralize your Bitcoin and use it, book a call with our team. Even if you're not intending on buying our product, feel free to book a call with our team, and we're happy to discuss to you how to do that, and we'll show you it for free, right? So that's an important thing. But definitely there's a huge advantage in doing that. But at the same time, not everyone wants to use their Bitcoin as collateral. Some people would rather spot hold their Bitcoin and then just supply USDT for the system to trade with. So it's very robust and it can do either or. But what you want to think about is obviously when you're trading USDT, you're simply making profits in USDT on that balance. You're not gaining exposure to Bitcoin's upside. So if you are someone who's a maximalist on Bitcoin, or obviously most people watching this show are, definitely using Bitcoin as collateral is probably the best thing you can do because you're getting dual exposure to generating profits from your Bitcoin and its price appreciation over time.
Yeah.
But definitely collateralizing it is the key. But it is still something that is quite new. And we're just in a space now where regulations are finally starting to open up in America. And let me explain this because Giovanni wanted me to talk about Coinbase. So Coinbase looks like it's going to be the first exchange that's going to actually allow a calendar perpetual futures trading. And this is important because a lot of people might have seen an email from Coinbase recently saying futures are live. But there's a key difference here. For anyone that doesn't understand how market works, what you have is dated futures and then you have calendar 24/7 perps. There's a big difference. So the futures that are opened right now for American clients work based on dates. So they're not actually open and 24/7 yet, which for our algorithm actually causes problems because we need the market to be open 24/7 for the execution to work correctly. So although futures have opened up for now, they're not actually 24/7 calendar perpetual futures. Now, that will be released this year. They just haven't given a specific date. But for anyone listening, this is a very, very exciting thing. I mean, Americans have been stuck using spot exchanges for years now. And the fact that this is opening up, it's a very, very positive thing. Whether they're going to allow you to collateralize your Bitcoin straight away, I'm not sure. But what I do know for a fact is if they're able to create regulation around futures and derivatives products, eventually collateralizing your Bitcoin will become available to all users. But for now, even if you're in USA, you can still get access to Bitcoin collateral exchanges, and we're happy to teach you how to do that. Now, for the algorithm, how it does what it's doing, right? The key with what we do, we have a very, very unique and in-house logic that we built for the algorithm. And this is something that's very important. And I want to make this point, right? That our algorithm is not predictive. We're not trying to predict what Bitcoin's doing over the long term. We use the power law support to know Bitcoin's key levels. And we know already that with the power law, regardless of bull markets, bear markets, it's going to continue to go up over time, right? So all we focus on is making sure the power law support is our key level, which is roughly around between $38,000 to $40,000 Bitcoin price at the moment, and we set that as our key level of protection. Beyond that, the algorithm, a lot of the reasons it's able to perform so well is, as you can see here, one, it's got very, very powerful buying capability. So its entries are very, very, very good. The way we do this, we use a unique blend of indicators and we normalize them and gave it a value between 0 and 1. And the algorithm uses this logic to determine whether the short-term price structure is looking bearish or bullish. If the short-term price structure based on these values are bullish, the algorithm will make buys faster to get itself into the market in a better position. If the outlook is bearish, the algorithm will take longer to make a buy because it's anticipating price to fall. But this is not predictive. It's simply reactionary and it's reacting to the exact data it's been fed. So as you can see, because of that, this gives us the ability to not worry about what Bitcoin's price is doing on a day-to-day basis because, we're not worried that Bitcoin's price is going to fall to the power law support in a straight line. Now, it may fall to the power law support. We have to realize that can happen, but it's not going to go like this, right? Price action can't move like that. It has to slowly make its way down. Even if it's got violent moves, these moves will still have impulses, right? So the key to this is realizing that the long-term structure of Bitcoin is upwards. And when you're trading an asset that's only going up over time, the day-to-day price action doesn't matter. The key is being able to protect the allocation, being able to protect the capital, and understanding where to place the buys. And as you can see, there's a reason our algorithm is buying at local bottoms. This isn't happening at random. As you can see here, this was a bottom, this was a bottom, this was a bottom. So the way we've designed it is to make sure it's got the ultimate and the most efficient entry points. And those entry points, more than anything else, allow the algorithm to put itself into a position where it's kind of trading before the move happens. So as you can see here, we already know that the market is going to recover and go up. We're just making sure that we are putting ourselves in a position to move with the liquidity, not be harvested by the liquidity. This is a really, really important point. And I spent most of my life as a trader being exit liquidity and being harvested, right? I spent a long time doing that. And it took me a very long time to be a part of the liquidity and moving with it, not being harvested by it. And I'm sure Marcus can talk about this as well. You know, when you're a day trader earning your stripes, you spend most of your time being a plankton, whereas now we're actually swimming in the direction that the market moves, which is very, very, very important. So hopefully that gave a good overview of what our algorithm does. And of course, always feel free to book a call with our team. It's completely free. You do not have to buy our products. Just hop on a call and we'll give you as much free information as you need. Thanks, Giovanni.
Yeah, thank you. I just so you have two ways to get involved. One is if you follow me on X, you can DM me anytime and ask me about the bot, and I can answer questions. We did actually a seminar, a webinar, where we go more in depth on how the bot works, what it does, all its characteristics. So maybe that is a good starting point. You can see down there is these labels, right? This whatever they are called, the ticker. You can see the ticker, the website where to go and look at our webinar, and then there is a phone number that you can call, or I think a button actually that you can click and get an appointment. But you can also DM me, ask me question, and then it's important to make this call to the team because they have everything set up where we welcome you, to our community. We explain you in details. You can ask any questions. It's a complete free call. Usually they spend 45 1 hour, right?
Yeah, usually an hour. Yeah.
Yeah, and you will have a full view of what the algorithm is doing, what are the results and all kind of things like that. What is to expect from the bot? About something like 2 or 3% a month at least.
Yeah, so that's a good question, Giovanni. And it does really depend also on what Bitcoin is doing. This is another important point I want to make because I think when we talk about monthly returns, sometimes people think that means on the 28th of every single month you're going to receive a payout, but the market doesn't work like that. It's more lumpy than that, right? So
yeah, sure.
Sometimes if you're in a structure where there's a lot of volatility, you can be taking profit all the time. Other times you can be in trades for a while. But the key is that usually somewhere in the range of 2, 3 to even 5% a month, depending on the volatility of Bitcoin, is really a driving factor in that. But yeah, around that range.
And that, again, it's important to emphasize it's on top of your Bitcoin because people use these tools in different way. But to me, the most attractive thing was I'm having my Bitcoin, I'm holding my Bitcoin, and usually, of course, they go up in value, but this is all what they do, right? But now imagine that you are holding your Bitcoin. Of course, there is always a risk, right? Anytime you go beyond hodling, even hodling is a risk, but we are trying to limit the risk to the minimum. This is why we use the power law, because the main goal is that preservation of capital, right? And if you do it, so we have follow some of these crazy leverage because they actually belong to that red region, right? These crazy people that do 100 per. Actually, in fact, usually Marcus doesn't even show 100 per. You usually show 100 per because these are really the most degen people that there are, And these people, yes, if they're lucky, it's like winning the lottery. They can make a lot of money, but usually because they are gamblers, they are going to try again. They are not stopping there. and we are going to lose everything, right? So
the market will always get you. The market will always get you.
So we don't want to do that. We use a little bit of leverage, to amplify the ability of a bot to actually use the inherent volatility of Bitcoin, but it's so small and so calculated because everything we do is calculated, understood. We try really to go deep in understanding Bitcoin. This is why we don't trade anything else. We want to. We are monogamous, right? We want to only date Bitcoin. This is the only girl that we like because she has everything. She's
exactly
crazy enough. She has crazy enough to be entertaining, but stable enough, to be a good long-term relationship, right? It has everything. So that is the entire idea, right? And so we optimize all these. We really go deep in understanding Bitcoin. And with this, what I like, because after some time, I just see my balance in Bitcoin, and they grow. So imagine, you get both the benefit of owning Bitcoin, but also you own more Bitcoin because every time I get a gain through the bot, I buy more Bitcoin. That is what they do. That is what is appealing to me in this system.
And Giovanni, even this is the other thing. Throw the idea of crazy numbers aside, right? I dare anyone out there to go and use a compounding calculator and look at how much you will make just by growing your Bitcoin by 20% a year. Forget just 20% a year on top of your Bitcoin over 5 to 10 years. Go look at the numbers because it will blow your mind, right?
And so just give you an example. Let's say that so we are really, really, really conservative, and let's say we do 2% a month, right? So 2% a month, and I can show you. Actually, I'm going to show you in the comments because you can follow this calculation for the people who don't know, right? The way to do compounding is this. I'm going to make a comment. Let's say we use basically a way to express percentages as a fraction, right? So I'm going to write 2% as 1.02. Then you compound it over the number of months in a year, right? So that one, and I just wrote it in the comments so everybody can see. So that is 1.02, and you use then the power. This is another useful thing about knowing how to take the power. And you can do it with your calculator, right? 1.02 to the 12. What is that? 1.02 to the 12, it's about 26, okay? So it gives us 26 if you do it yourself, right? 1.02 to the 12, it gives us 1.26. So that is 26% a year, right? But now let's try to do this for the next 10 years and let's see what happens. What will you do? You will take 1.26, right? So let's say you stay with that, you use this system. And by the way, it's right now our business model is where you buy one-time fee. So once you do this commitment, you can keep the bot running for years. So let's say we run it for the next, let's do it 8 years, because in 8 years, Bitcoin is supposed to go to $1 million, right? So if I do 1.26 to the power of 8, what do I get? If I do 1.26 to the power of 8, so you're compounding, because you can take all your gains and now you have more Bitcoin, so you can use more collateral. So 1.6 to the 8 to the power of 8 is 6.35. So 6.35. So you're going to have 6.35 more Bitcoins. How that sounds in 8 years, okay? And Bitcoin will be $1 million at a time, right? So it's a way of multiplying your Bitcoin if you do it in a disciplined, focused manner. And we mentioned 2% a month because we feel very confident the system can provide that. It's actually a relatively because many times people say, well, 2% a month is nothing. No, it's not. It's incredible. If you could do it consistently, of course, right? There is not like a little elf that brings you 2% every month. It's in average, right? It's an average process. But if you do this in a disciplined way and you're focused, why will you just hodl? When you actually can multiply your Bitcoin. Uh, so and yes, there is a risk because it's risky to put your Bitcoin in an exchange. This is why maybe you don't want to do it with all your Bitcoins. You want to do it with a percentage. Eventually, where it be, and we are looking always things like this, where it be fully, where it will be decentralized solutions, and we are looking at decentralized solutions where the risk of keeping your coins on an exchange becomes less and less, right? Then it basically is resolved in that way. And of course, trading always comes with a risk, right? Uh, and by the way, this is not financial advising, this is just education. We are trying to tell you what the possibilities are, and we are creating tools that people can use. You are in full control. We are not asking for any money. We would never send this money to anywhere. In fact, don't ever do that with anybody. That is usually, a scam. The bot trades through an API while you're keeping the coins in your exchange. So, but I just give you an idea. If you do this in a focused manner, uh, it's really a good solution for people that didn't buy Bitcoin 10 years ago. Because if you buy Bitcoin 10 years ago and you kept your Bitcoins, maybe you don't even care about doing something more aggressive. But if you don't, and you have joined recently, maybe you want to be more involved, right? You want to maybe learn to do certain things like using these tools to enhance your Bitcoin holding. So that is how I see it. This is how I do it. I joined 12 years ago, and I still find this a very powerful tool for myself. I use it all the time. Anyway, guys, do you want? I
Questions?
don't know if we have any. Yeah, I think we answered most of the questions. I don't know if you want to address some of the questions that we didn't address. There are some questions about security of wallets and stuff like that. I don't know if you want to go and discuss this, but I don't think it's super relevant for our discussion. There are risks associated with having your coins on an exchange, unfortunately. And these risks are becoming smaller and smaller because there is more maturity in the ecosystem. Exchanges are more professionals and so on. And soon we will have also decentralized solutions. We are not completely there. The volume is not there. There are some technical details, but we are looking at solutions that are decentralized too, also for that.
Yeah, there's a couple of questions. There's one that just came in. I'll take that one. You can take a shot at it, Sebastian. It says, could you please show some examples? We could just explain it because we don't have a lot of time left. But he says, can you please show some examples of how the platform loses money? Well, I'll just explain it, and you can chime in, Sebastian. Basically, at the core, what we're doing with the algorithms is following the trend. I think the risk exposure is no different than if you have Bitcoin. Everybody on this call has Bitcoin, and we all have the risk that it could go to zero. And we're comfortable with that. We understand that. And the algorithm trades in confluence with that. It's almost nothing has zero risk. It has risk, the same risk as if you were holding Bitcoin. It's the same risk. So as far as losing money, your biggest downside with running this algorithm is the fact that you may have to wait on a take profit or wait on an exit. It could be a prolonged wait. So as far as actually realizing a loss, it is extremely rare. I think we're in the high 90 percentile. And the only time that you would actually realize is the same as if you were holding it. So that's the same exposure. What do you have to say about that?
Yeah, no, it's literally that in a nutshell. So it is the exact same risk as holding Bitcoin, really, in essence. And there is a risk in that. I think people like to believe, but there's a risk in stepping outside your house. So you have to also ask yourself, I guess the risk is so small, but it doesn't mean that there is none. And I think Giovanni made a really good point about that. It just depends on whether you're the type of person that's happy to have their Bitcoin sitting there, because you can get a good result doing that. But I think it's important to understand that the algorithm does a little bit more than that. It doesn't just give you the ability to earn yield on your Bitcoin. It also gives you the ability to earn yield when your Bitcoin is down in value. Because remember, when Bitcoin's in a bear market and everyone's in a drawdown, no one's making dollar gains on their Bitcoin. Their Bitcoin is down in value. And this is a really important thing. The algorithm will continue to produce you USDT while the market is down and while Bitcoin is in a downtrend. So that's a huge advantage as well. But of course, it's always something, you have to do your own research on and make a decision for yourself. You don't ever make the decision because you're following someone else or
Let me, yeah, go ahead, finish your thought.
no, I was just going to say, I think it's important everyone does their research and make sure this is something that makes sense for them and never blindly just follows what people are doing, because it's important to.
So the main reason we are focusing on Bitcoin, because as a Bitcoiners, right, and our main thesis is that over the long term, Bitcoin grows, right? And in particular, if you embrace this theory of a power law, we even know how fast it's growing and where it's growing, right? That is the thesis. In a situation like this, you don't have to close a trade, right? The main way that that the algo trades, it uses two things. If the price goes up, we use momentum. So we buy, right, when there is enough of a move relatively where we are. And then we buy these future contracts, remember, right? They don't expire, etc. They work 24 hours, 24/7. And if a price goes up, you bought low, you sell high when a certain percentage is reached, right? Without giving all the details of how the algorithm works. Now, when the price goes down, that is actually my favorite. Of course, I want the price overall to go up, but I start to enjoy the dips because, in fact, you hear all the time, right? Oh, the price corrected. Let's buy the dip. But you have to wake up in the middle of the night if it was a dip and try to buy the dip because maybe the price corrected, you miss the dip, etc. Can do that? Well, a bot can do that because this is exactly what the bot does. As the price corrects, you start to buy all this dip. I don't know if Sebastian can show the chart that you were showing before, right? It's easy. And it's one of the things that made me join the group and work with them was that these are not random dips. It's not just, oh, the price went down 5%. I'm going to buy something randomly. No, it finds all the local bottoms, almost like in a surgical manner. It knows how to find these little dips almost to perfection. Can you share this the screen?
Can you
Yeah,
can you see my screen, Giovanni?
Yeah, here it is. Look at all these minima, right? That the bot is finding. So it's buying all this deep. And what happened? Look at that orange line. That orange line represents your average price. So it's the average price that you bought, right? Because you're DCAing down and you're doing it in a clever way where every time we go, we buy a little bit more, a little bit more, a little bit more. So you are not going to have your average, right? It's not going to be exactly the bottom because you will have to be a magician to know where exactly the bottom is, but you are approximating the bottom more and more and more. Okay. And the critical thing that is different from any other system of this type is that we can calculate ahead of time what is the possible maximum range because we have a power law, we have a support, and then we say, okay, let's allow ourselves enough of these orders, right? Because you have to have a cash, you have to have a collateral to do all this buying. You're doing it as a kind of a loan. You're doing it using your margin, but you want to do it in a way that you are not exposed to be liquidated. And we can do all these. We have calculators. We studied, Sebastian, Marcus, all the team. They work all the details in such way that the risk of being liquidated, because it's the strongest risk here, right, is basically non-existent. Just to give an idea, one of my algos right now, one of my bots, because you can launch actually different versions, you can launch more than one, right, with different setting, different level of risk, etc. One of mine has a liquidity that is all the way to, I get liquidated if the price goes down to $5,000. it's basically not going to happen, right? So that is the level of risk that I'm willing to deal with. And so, as Marcos explained, the worst thing that can happen is that, all right, we go down, buy. My mean buying is going down too. Well, Bitcoin always recover, even during a bear market. Even during the bear market, we see times where it goes down, right? As Marcos explained all the time, the market needs to take a breath because it cannot just simply short, cannot go down all the way like in a straight line. It's going to have moments in which it recovers. And when we recover, we sell. And it doesn't matter if a market is in a bull run, if it is in a bear market, you will always see these kind of movements where we go down, we average down. When the market recovers, you sell. When the market recovers, you sell. When the market, you see? And so basically, they mentioned 90% winning rate because maybe once in a while you say, you know what, let me close this trade anyway because whatever reason. So far, my winning rate is 100% because I didn't feel the need to close anything. I just wait. Now, sometimes you have to wait a little bit longer, but in general, the wait is not that long. So when we say 2% a month, we already calculated that there are times where you have to wait a little bit longer. Other times you do a lot of trades because there is a lot of this up and down. So ideally, a lot of up and downs like this is perfect, right, for us. People find it annoying. For us, actually, when you start to use this system, it's actually a good thing. We love it.
Yeah, consolidation makes us the
Yeah.
most money. I wish it would consolidate all the time.
Exactly. Well, it's placing. This is what I talk about previously as well, because Giovanni's made some really good points. But it's making the move before the leg up happens. So before this pump up here, we were already in the position that we needed to be in to get out. So we're not forcing ourselves into positions. We're putting ourselves in a position.
Yeah, and look at this. And look at where the red square are. That is where it's sold, right? So the market started to recover, and when you got a nice little gain, that was kind of a local maxima at that point, it's sold. And now we are waiting. So he's continuing to buy. He's waiting for the next move. And so on and so on. That is the logic of the code. That is amazing. It's a very simple logic, but very, very robust. And what makes the difference with anything else is that you do it with Bitcoin, where the thesis is going up over the long term. And also it has all these irregularities, like the presence of these, it looks like unviable floor that has been very consistent over the entire history of Bitcoin. That is how it works. You see? That is the logic.
It's like Giovanni likes to say, I think this is always such a good point because, this is the key. Obviously, we've put a lot of time and effort into this, but I'm not sitting here saying, look at us, we're God, we're geniuses. Bitcoin is allowing us to do this. It's Bitcoin. Bitcoin is the king. It's what's letting us and allowing the algorithm to do this. You go and put this on some random altcoin, it's not going to work. It's not going to work.
Or even other assets. Right. So this is why, and you're right? This is says that. I don't know how to pronounce your name, but they say amazing, long-term holder.
I just call him D.
So D is exactly right. Most of the time, we just say, okay, who cares, right? We had a crash, right? Of course, we are humans, you are a little bit worried, whatever. But inside you call your inner Bitcoiner, say, listen, Bitcoin is going to recover. Guess what? With this bot now, when it's going to recover, you just didn't make up what you lost. You're actually going to get more Bitcoins. You see, it's really amazing.
I think he just had what's called a light bulb moment.
Right?
He got it. Yeah. What we do is not magic. This is not magic. We take advantage of the long-term prospects of Bitcoin. We all believe in it. The worst case scenario for us is that we have a timeout. But if you hold Bitcoin, if you own Bitcoin, you have a timeout anyway. So you're not doing anything different.
Transparency, because you see, you are going to, if you watch these episodes, you're going to know the team, right? It is another incredible thing because most other team organization that I follow online. I saw some advertising. You never know who are these people. What are they doing? You know our names. You know what we are talking about. You can DM us. We are here in the open, right? I am there all the time. You meet us at the conference. So we were at the Bitcoin conference. We had the booth. People came to us. I had dinner with people that are using the system for a long time. And you know what these people told me? The best decision after buying Bitcoin was to use the Minotaur Trading System. These are literally what people, because I was curious to myself, right? And new to the team. I wanted to talk with the people, and this is what they were telling me. Giovanni, we are here having dinner. We will come to the conference to beat up these people if it didn't work. Instead, we are having dinner with them, because we are, it's like a family, we became like a big family. And the beauty, of this is, we are transparent with everything. So one of the things that happen when you hold the asset for a long time, because you're doing it at margin, you pay a little fee, right? This fee increases with time. But so far, these fees are very, very reasonable. They are never, you always pay off for the fee because, it's like relatively low interest, with these of these margin fees that you have to pay. That is really the other little negative things about holding too much, but holding too long time. But you can see, right? The idea is, who cares, right? Eventually, Bitcoin goes up. When it goes up, I will make my money, right?
You got to ask. You got to also ask yourself, Giovanni, if you have Bitcoin, how do you get more
Exactly.
Bitcoin? Everybody wants more Bitcoin, but how do you actually
Yeah,
get more Bitcoin?
and
Holding Bitcoin doesn't get you more Bitcoin. And you could either trade and try to get more Bitcoin, which is very dangerous. You can mine and get more Bitcoin, but that's very, very expensive. It has high overhead, high capital expenditure cost.
now,
So there's not many ways
I
to
talk
get
to people
more
about,
Bitcoin.
like, I like, for example, to learn a little bit about the options. But I do it more for fun than anything else, because even with option, I have to go and pull out the charts. I have
It's
to
trading.
understand. I have to take a risk. Maybe I do cover call, blah, blah, blah. I do it because I like it. I like to think about these things, but I do it with a very, very small, more for fun than anything else. It has worked. I got a few $1,000s out of that. Okay, more Bitcoin, another way, another parallel way, but nothing like this, because listen, I can go in vacation. I can go and do something else. I can go and study whatever I want to. I can do whatever, and the bot continues to work 24/7. Marcus say it doesn't sleep, it doesn't eat, it doesn't need anything of this. Can you do it?
It's like mining it. You're mining
You're
Bitcoin with
mining the
software.
volatility
That's
of
what you're
Bitcoin,
doing.
right? Without
That's what you're
any
doing.
equipment, without
Without any
without
equipment. No lease, no
yeah,
leases, no real
you
estate,
make
no
one-time
overhead.
Yeah.
Yep.
investment, and this investment is worth all your life, right? So it's one-time fee
Yep.
with the group. So it's, yeah. Have you updated the LPIN potential wallet for PDC? And no, not yet, but we are going to do that. The log periodic power law. We discussed that in the other show with Steven. But yeah,
You want to do the other one, Sebastian? Josh says, "Is there 2%?
I can
Is
answer
it
that,
2% a
Marcus.
month back
I can answer
tested?"
that. Yeah.
Yeah.
So,
All right, I'll read it. I'll read it, and
sure.
you answer it. He says, "Is the 2% a month back tested, and for how long in the past, if so, and how much collateral is recommended to make the bot
Good
worth it?"
question. So when we're talking about 2% a month on this show, and the purpose, the reason I got Giovanni to do that calculation earlier, doing just 20% a year, that's actually very conservative. I want to make that clear. The algorithm has the
Yeah,
ability to make more than
very.
2% a month, but we like to use a tiny number to show you the power of compounding over a long period of time. And the key is that you can essentially generate meaningful, significant yield without trying to do anything crazy or stupid. Because if you try to make money quickly, it's like anything in life, right? There is no quick fix, get rich solution. Anything out there that promises you that is a lie. But with Bitcoin and with compounding, you can still get really meaningful results. Now, to answer the question around how much collateral is recommended, that's a hard question to answer because it's completely subjective based on your own personal finances, your own personal risk tolerance. One thing I can tell you, and any of our customers can attest to this, when you work with us, it is a bespoke experience. So what that means is we give you bespoke consultation based on your own personal risk profile, your own personal ability to allocate funds, and we'll help you work that out based on what you have. But it is a subjective question, and some people have much more collateral than others. So, I'm happy myself to tell you the exact amount you need on a one-on-one call, or our team can run you through that also. But it will be bespoke, and the system will be built around exactly how much you're putting into the system. No one gets put into a black box. And it's not like everyone's just on the same global setting,
Yeah.
because everyone has a different amount of Bitcoin and everyone has a different level of risk. So hopefully that answers the question.
What you can say is that this is a serious thing, right? It's not like $100 bot that you find in some alley of the internet, right? This is a serious project. The reason why I'm behind it, and they tested for months and months and months, is because I wanted to make sure that this is like a Ferrari. It's the Ferrari of trading system, automated trading system. So it's a serious investment, right? You take a commitment, you join our team, you work with us, and we work with you, but it's a serious thing. So it has to be, you can already imagine, it has to be something where, if you have a couple of, let's be completely transparent and honest. If you have a couple of $1,000 invested in this, is great. It depends you are what, if you're a student, if you are in a third world country, but this thing is not for you, because they will require you to invest a little bit more on that, right? Because to make it work, it's not that it doesn't work with a few $1,000s, but the level of commitment, the level of investment, even the initial investment that you have to make, because basically, think about, you are hiring a team. You're hiring me, Marcos, Sebastian, all the team behind it, that is several people. There is more than a dozen of people in the entire company that works to make this thing work. You're hiring us to be your support team. So you can imagine it's a commitment, right? It's something that I think, if you are serious, it's a very, very affordable, and it will be, the return on investment. I had a friend of mine, right, that tested the system. He got back within few months, immediately, is a return on investment, right? It's something that pays off almost immediately, but it requires a little bit of seriousness from you, right? So I will say it's beyond a few $1,000s, but
Yes,
it is no hundreds of thousands or millions. It's very affordable to the average investor, I would say.
It's a professional grade
that's right.
algorithm.
That's
so
right.
It's institutional,
And it's not going to make you rich
level.
overnight. And anyone out there who's just getting started on their crypto journey, because it's so easy to get suckered into this stuff, there's nothing out there that's going to take your $1,000 and make you a millionaire. Start thinking in the mindset of how to accumulate wealth over time, rather than how to get rich quickly, because that's the biggest trap for everyone.
Exactly. And this, in a sense, answer also the MicroStrategy question, right? So in theory, the algo, because a lot of, MicroStrategy price action is very strongly correlated with Bitcoin. But listen to this, right? Why do we want to focus on Bitcoin? Because we can go to sleep at night and knowing that Bitcoin eventually will go up. Can we say the same thing with MicroStrategy, given that it has all the bad things that we say Bitcoin doesn't have, like a CEO? It has a CEO, right? I like MicroStrategy, so I bought some MicroStrategy, a small little percentage, because okay, whatever, it's even being part of the ecosystem. You are supporting what Sailor is doing, whatever, But I will never think about this as a foundation of my long-term investment, and so I don't think we want to touch it, right? I don't know what you guys are thinking, but that is my idea. It doesn't have all the beautiful characteristics that Bitcoin has.
Well, MicroStrategies is a derivative of Bitcoin, so why you should focus on the main asset and not the derivative. So get the Bitcoin.
You're beginning to put your faith in
proxy,
and
right?
it's
Your proxies.
exactly. You're investing into a business, into a company. These are completely different things than investing your money into Bitcoin. And I think once again, most people buy MicroStrategy because they want to get rich. They don't even really believe in what MicroStrategy is doing. They just see the price action and go, "Wow, I'm going to get wealthy." So, it's the same issue with. So, do your own research and really understand what you're buying. Don't just buy it because people are going crazy buying it. It's usually a recipe for disaster, in my experience.
All right, that same D, he said, "How can you briefly explain how the collateralization of Bitcoin works in European exchanges?"
I can answer that. So on most primary European exchanges, they have a couple different instruments, either called unified trading accounts, which allows the collateralization of cryptocurrency assets to be traded against USDT contracts like Bitcoin USDT, or in exchanges like OKX and a few others, you have something called multi-collateral asset mode, which is essentially the same thing. So these exchanges offer these services. So you have the ability to use collateralized assets and trade against them, which is very, very, very powerful. But once again, they give you the option to collateralize any of your assets and also through cross margin, which means it will actually draw from the total allocated margin in your account. So if you are going to look at these instruments, they're really excited, but just be aware that, the point to drive home is the only asset you should be collateralizing is Bitcoin, because if you collateralize other assets, that can spell disaster also. But those are a few of the instruments that European-based exchanges will offer you. And if you want to figure out how to find them, go on the exchange websites and look for either unified trading accounts or multi-collateral asset modes.
Yeah, many of us use Bybit, for example, because it has all these nice characteristics. So basically, you keep your Bitcoin in the unified trading account. Again, if it was a complete DeFi exchange, I will put the majority of my Bitcoin there, if I was sure 100%, and I will not have a problem with the bot doing that. Now, it's safer, and I am a very conservative person. This is why I have these very, very low liquidation levels, etc. I'm not pushing the bot to its extreme um, ways. Just I want to do this in a very consistent manner. Where I don't take a lot of risk. But it's a risk because unfortunately there is still a risk associated with exchanges. Eventually, maybe this risk will go to zero, right, or almost zero. But
Yeah.
do it with a small percentage of whatever that is, and then it sits there, so you're still exposed to the growth of Bitcoin, but then you can use it to basically borrow against your Bitcoin, and you can open. Usually, we do like maybe 5 pair, 10 pair at most. If you want to be a little bit more aggressive, but we do it in a way where there is enough collateral in your exchange where Bitcoin will have to go below the power loss support by a big amount before you get liquidated. And if even and we don't go there in a day, right? Unless there is an asteroid coming towards the Earth, and that we will have a
You have a bigger problem if that happens.
bigger problem.
You'll be worried about Bitcoin.
So there are measures that you can take anyway to protect, right? Because our main mission is we don't want you to lose your Bitcoin. We want you to get more Bitcoin. So we protect your account. We try to do everything possible to make it safe. That is the idea.
The power law allows us to do that more than
Yes,
anything
exactly.
else.
And Bitcoin in general being being this good companion, being this good girlfriend, whatever, if you want to think in that way, that has everything. It can be fun, and it's also very loyal over a long period of time. It's almost impossible, right? Have you ever seen that graph? It says how I know this is, it's not good I don't know to say. I know that this is not woke thinking, so I'm not a woke person. So I'm going to use it as a funny example. But that graph that says, "Oh, how crazy a girlfriend is versus how hot it is," and then there is like a spot over there where
I've seen this before.
where the unicorns are. Right? She's a 10-10, but never exists. Right? Because, actually, no, wait, she's here because she's not that crazy. So Bitcoin is crazy enough where it is, right? That is, and it makes it fun, and at the same time, it's very loyal, right? And it's hot, right? So Bitcoin is both, right? It's these unicorns that is supposed not to exist, but it does exist, right? So it's about the best of both worlds. So anyway, guys, let's. I think we cover a lot of topics.
Tonight.
We will be here anyway next week. So if you have other questions, but you can DM me. You can DM Marcus. Marcus is also on X, and we will be more than glad to answer your questions. You can see here there is if you DM me, I can give you the link directly if you don't want to copy all these, but you can see where also how to book a call in the ticker below. But DM me if you have more questions and we can discuss it. All right. Eppur si muove, right? That is what Galileo said when they told him that he had to reject his theory that the Earth went around the sun. He did it because he was going to be killed otherwise. But when he came out from the tribunal, from the trial, he looked at the trial house and he said, "Eppur si muove." It means, and yet it moves, right? So the truth is the truth that Bitcoin over the long term is going to go to 1 million, to 10 million, and this is what we count as, as Bitcoiners. All right, guys, thank you so much to listen to us. We will be here next week. Bye, everybody.
Thanks for your time, everyone. Thanks, Giovanni. Thanks, Mark.